Okay. Okay, good evening. Good evening to everyone. Super celebrate you. Super excited to be on this session this evening. Okay, so today is day three. This is the third session of our Forex trading mentorship program. And like I said, this is the beginning of module two. In module one, we looked at some of the basic concepts about forex trading. We looked at what is forex trading. We looked at some key facts about forex trading. We looked at how to the what is being traded in the forex market, the currency pairs, how to read the currency pairs. We looked at a whole lot of other information as far as forex trading is concerned. We looked at the trading sessions. We looked at what else? What else did we look at? Uh, we looked at trading session. We looked at I think trading styles also. So it's a whole lot of things. So this is the beginning of module two, and we are just gonna run this quickly. In this module, we are gonna be looking at candlestick analysis. We're gonna be looking at the trading chart. We're gonna be looking at risk management, and of course, we're gonna look at trade management. So come with me on this session of the Forex Mentorship Program. What is a candlestick? A candlestick is a technical tool for Forex analysis that consists of individual candles on a chart, which indicate price action. So if you new to forex trading, this perhaps one of the most popular, you know, tool you're going to be seeing when it comes to trading analysis. It's called the candlesticks. There are actually three types of charts, major types of charts we have in, on the MT4. You will see the bar chart, you see the line chart, and of course, you see the candlestick. They call this the Japanese candlestick. Okay. Now, what the candlestick is designed for is to show you and indicate price actions, price movement, or what they call price behavior over a given period of time. So as you can see right there on this chart right now, you can see that we have what we call bearish and bullish candles. And this is what the anatomy of the candlestick looks like. A candlestick contains what we call the wick, the body, and the tail. The wick, the body, and the tail, or what we call the upper wick and lower wick. Now, when you get into a trading chart, you'll probably see different types of candlestick, or candlestick of different variants. Okay. Now, what's important here is that have this basic understanding that most candlesticks are going to have the body. And in fact, there's some candlesticks that have tiny, tiny bodies. Maybe we'll, in the course of this presentation, we'll check them out. Okay. Another feature of a candlestick that you should pay attention to is the high and the low, then the open and the close. So how does this candlestick stuff work? So where you see a candlestick and you see the a moment, give me a moment. Okay. Okay, so when you see a candlestick that opens at the top like this, it's regarded as, and that opens at the top and closes at the bottom, just as this indicated by this red arrow. That is a bearish candle. And what is a bearish candle? A bearish candle is a candle that indicates a drop in price. A candle that indicates a drop in price, that shows that the price of a particular currency pair opens at a particular level and then closes at a lower level. It opens at an upper level and closes at a lower level. Now, you can see in this bearish candle, we have a wick, and the top of the wick is regarded as high, while the low of the wick is, the bottom of the wick of the lower wick, or what we call the tail, is regarded as low. Okay, now you're coming. Welcome to the call. Welcome to the class tonight. Just type in your name and where you're joining the call from, right in the chat box. Put in your name and where you're joining the call from in the chat box. Welcome, everyone. Put in your name in the chat box and where you're coming from and where you're joining the call from. Let me celebrate you quickly. Your name, because today we are not on Zoom, we're on StreamYard. So we're on YouTube, so we not have the privilege of interacting via audio. So it will only have to be via chat. Okay, so please put in your name and where you're joining the call from, as so that I can make progress. Okay, so just like I said, how you know a a bearish candle is a candle that indicates a drop in price, and how you know it is that it opens at the top and closes at the bottom. So the price will open at the top and close at the bottom. Now, when you see high and low, what it tells you is that within the time frame that this candle opened and closed, there was a time that the price went as high as this level, and this is the highest price which it reached, and then there was a time it came as low as this level. So that's why we have the high price and the low price of a candle. So there are four prices you will see typically on a candlestick. You will see on the candlestick, you're going to see a high price, you're going to see open price, you're going to see close price, and you're going to see low price. High price, open price, close price, and low price. Now, so we talk about the bullish candle. Welcome, Mr. Simon, all the way from Redemption Camp. Go to have you on the call tonight. Now, what the bullish candle is a candle that indicates a rise in price of a currency pair within a given time frame. A bullish candle is a candle or a price action that indicates a rise in price of a currency pair within a given time frame. So just like the opposite of what happened with the bearish candle, when it comes to the bullish candle, they have about the same properties: the wick, the body, the tail. Okay, they have high, they have open, they have close, and they have low. The only thing that happens is that a bullish candle that indicates a rise in price opens at the bottom and closes at the top. It opens at the bottom of the body and it closes at the top of the body. So how you know a candle that is buying or selling is by you paying attention to where they opened and where they close. Now, this is what happens significantly. I'm going to take you to the screen for you to see that. Let's quickly look at some scenarios here. So, what you see here, ladies and gentlemen, what you see here are candlesticks, okay? These are different candlesticks. Okay, now let's pay attention to this guy here. Let's pay attention to this guy here. Now, let's pay attention to this guy, this orange candle. Now, you can see that these are candlesticks. Like, let me zoom so that we can see them very well. Now, you can see that these are candlesticks. Now, if you look at this candlestick, ladies and gentlemen, you will see that what we call the wick, right? And the tail. You see here, this is the high, this is the low, this is the open, and this is the close. Okay, open here, and this is close here. Okay, so you can see these four properties. So you see the wick and the tail. You see here we have the high and here we have the low. Here we have the open and we have the close. Now pay attention to the rally of candles, the candles that followed after this one. You notice that after this candle closed here, the next candle opened right after it. And because it was also a sell candle, a bearish candle, you will see that what you see is a series of a fall, a drop in price. So that's what you see. You will see that the price began to go down. Why? Because there are a series of bearish candles following each other over a period of 30 minutes time frame. within 30 minutes. So each of these candle actually open and close within a time frame. So that's where we talk about different time frames. We are going to look at that very soon. We talk about different time frames. A candle opens and closes within a time frame. Okay. So now let's look at this other part. So here we have this buy candle, right? Now, if you look at this buy candle right now, you are going to discover that we have a candle with a body. Now, like I told you, you're going to find different kind of candles. You will see some that do not have wick. You will see some that do not have tail. Okay, but like in this scenario here, I'm going to show you something. You will see that each of these high and low indicate a price level. Now in this scenario, this is a buy candle. It opened here, and this is its opening price here. Let me color them. The open price, let's call it, this one opened with a blue color. Okay, let me taking it a bit so that you can see it. So this opened with a blue color and it closed, let's say it closed with a red color here. This is the open price and this is the close price. Now, in the case of this candle we are looking at, the close price is also the high price. Don't forget, I told you you have the high price, you have the low price. Now, here is the low price. Let me just make it a bit thicker. The low price is the black line here. And you can see the price indicated there, 0.63719. Then we have the open price, which is indicated by the blue line, which is 0.6372. And then we have the high price, which incidentally is also the close price, which is 0.6375. And you can see that the next candle that opened after it opened at that particular close price. Although it has a low, look at the low. This is the low. And it's also closed here. So it had an open price, which is the same price like the close price of the previous candle. And then it has one tiny wick at the top. I can see that tiny wick. Let me call, and that's the eye. Let's make it green in color. So that's it. So you have different, and then when you see look at this series of buy candles. When you have a series of buy candles, what do you notice is happening to the price? Price is going up. So when you see this series of buy candle, you realize that price is actually going up. Price is going up. Price is going up. Price is going up. Okay, so that's what the candlesticks is all about. That's what the candlesticks is all about. Okay, so yeah, the candlestick is an indicator of price action, of what happened to price within a given period of time. Okay, so it shows whether price is dropping or price is rising. Now, if you understand that, can you put in 1 in the chat box? You understand the explanation I just gave you? Put in 1 in the chat box. Put in a 1 in the chat box. Okay. So it's important you understand now, because now we are going into, okay, awesome. Mr. Debayo said he understands it. Every other person, if you know you understand, let me know you understand. Let me know you understand, okay? Okay, so that's cool. Now, talking about candles. Personally, there are many different types of price actions, but I'm just going to share with you 3 of them because these three are the ones I usually use in trading. There are so many of them, but let's just focus on these three. What are those three? Engulfing, pin bar, and inside candles. Now that we have understood candle anatomy, pay attention to this. Engulfing candles. Now, first of all, let me explain to you what price action is. The movement of price, and it's a method of analysis of basic price movement to generate trade entries and exit signals. Price entry, price action is the movement of price. It is a method of analysis of the basic price movement to generate trade entries and exit signals. So, in this scenario, we have engulfing. What is an engulfing candle? An engulfing candle is indicated by a small candle followed by a big candle whose body engulfs the small candle. So don't forget, I told you we have two major price movement: bearish movement and bullish movement. Bearish movement is a movement when price is falling or price is dropping, while bullish movement is a movement when price is rising. So when you see price moving, we say market is bullish. When we say price dropping, we say market is bearish. So now we have what we call a bullish engulfing. A bullish engulfing is a small bearish candle followed by a big bullish candle, or let me use a words you are more familiar with. It is a small sell candle followed by a big buy candle. Now, what makes it engulfing is the fact that the body, uh, the high and the low of the bullish engulfing engulfs the entire bearish candle, or in another words, the body of the of the bullish candle, of the buy candle, engulfs the sell or the bearish candle. That's what you call bullish engulfing. Now, this engulfing is only used for trading where it occurred at a low of the market, at the bottom of the market. We talked about that when we looked at where out the basic principle of trading. We say buy low, sell high. So you only use this as an indication to buy a currency pair when you find this bullish engulfing at a low level of the market. Now, bearish engulfing is just the opposite of bullish engulfing. It's indicated by a small bullish candle that is engulfed by a big bearish candle. A small bullish candle or buy candle engulfed by a big bearish or sell candle. Again, this is only valid for trading, to use it as an indication to enter a trade only when it occurs at a high level of the market. High level of the market. Okay, let's go to pin bar. Again, we have bearish pin bar and, of course, bullish pin bar. Bearish pin bar and bullish pin bar. Now, a pin bar is indicated, just imagine an hammer. Sorry, imagine a hammer, okay, used by the carpenter. That's what you need to understand pin bar. A hammer has a head and it has a long handle, right? In this case, a wick and a tail. So in the case of candlesticks, so this is the body or the head of this pin bar. Then we have one long wick to the upside and a small tail. to the downside. So when you see this and it is in red color, okay, that is and it opens at the top and closes at the bottom, okay, that is a bearish pin bar, a bearish pin bar. If it happens to be valid, it has to a high level of the market. It has to happen at a high level of the market. Okay. It has to happen if the bullish pin bar is the opposite. We are now in this analysis, we are just looking at this pin bar. Forget the two candles that are in between. Okay, forget the two candles that are in between. We are just focusing on the pin bars. Okay, and now for the bullish pin bar, for the bullish pin bar, again, it's like that hammer image. You have the body, and you can see it opened at the bottom, it closes at the top. It opens at the bottom, closes at the top, and it has long wick and long tail rather, and a short wick. So when you have long tail and short wick, and it opens at the bottom, closing at the top, it indicates a bullish pin bar. A bullish pin bar. Okay, a bearish pin bar has a long wick and a short tail with a body that opens at the top and closes at the bottom. A bullish pin bar has a long tail and a short wick opening at the bottom and closing at the top. That's a pin bar. Now, like I said, if a pin bar is going to be valid, it has to occur at the bottom of a chart. Okay. Now, the third one is an inside candle. An inside candle shows is indicated by a mother candle. We call it mother candle. So this is a case of a bearish, a bullish inside candle. This is a bullish inside candle. And why do we say it is bullish? Why? Because price open, it is indicated by this red candle, which is bearish. We call it the mother candle because it's so big and it's bigger than the inside candle. Now, the candle that opened next is a bullish candle, a buy candle. It's smaller than the big candle. Now, when this candle happens at the low level of the market, is a good indication that market is about to start buying. So you can use it as your buy entry signal, as your buy entry signal. Okay. So it's only valid in a downtrend. For you to trade this, it's only valid in a downtrend. Then a bearish inside bar, we have a bullish mother candle. That means a big buy candle followed by a small sell candle or a small bearish candle. So if you see this at a high level of the market, it can be an indication for a sell about to take place. Market's about to start dropping. So if you find this, it will give you a good opportunity to enter into this trade on a sell. Okay, so these are my three major price actions candle that I use to pick my own trades, and they have been over 80% successful when they are identified or used at the right levels of the market. So you are going to see a lot of this price action happening at different levels of the market. what you want to see it happen at key levels of the market, at high level of the market, key high level of the market, and key low level of the market. Okay, I believe you are following. Quickly, let's talk about time frames. Let's talk about time frames. These are all the time frames. I mean, some of the time frames here, or the popular ones, you're going to see in on a trading chart. So on the trading chart, you're going to see all this time frame. Each of these time frame indicates a period of time. M1 indicates 1 minute. M5 indicates 5 minutes. M15 means 15 minutes. M30, 30 minutes. H1, 1 hour. H4, 4 hours. Then D, daily, it means daily. W means weekly, and M means monthly. So what do all these time frame means? These time frames are the ones are the ones um, that shows the time within which a candle opens and closes. So when you go to M1 chart, so each of these time frames represent chart. They are chart. So if we go to 1 minute chart, every candle you see in the 1 minute chart means that those candles open within 1 minute. They open and close within 1 minute. So let's quickly go to our screen and go and see what we're talking about. So when we go to the screen right now, this is how the CHF, and how the CHF is, let's go to 1 minute candle, 1 minute time chart. So this is 1 minute chart. Now, 1 minute chart of this means that this candle now, you can see the candle that is opening now, is going to close in within 1 minute. This is 7:46. By 7:47, a new candle is going to open. And this candle, you can see this is the lowest point that it has been, okay, so far, and it's still going up. It's still going up. Is it going to close as a bullish candle? We don't know yet. On my own chart, a bullish candle is colored blue, a bearish candle is colored orange. So let's see. But we know it has formed this low. It opened at this point. Okay. We know it formed this low. And we know that it opened here, but it is still going up and down. We don't know yet. Is it going to close here? Is this place going to remain? Okay, good. Another candle has opened. Can you see it? And this is where it's closed, and this is where the highest point is. So each of these candles, it means that they open and close within 1 minute time frame. Okay. Now the next one is 5 minutes. The 5 minute time frame means that every candle you are seeing here opened and closed within 5 minutes. They opened and closed within 5 minutes. So every 5 minutes, a new candle closes and another one opens. Then we have 15-minute time frame. The 15-minute time frame means all of these candles you are seeing here open and close within 15 minutes. All of them within 15 minutes. 30 minutes within 30 minutes. 1 hour within 1 hour. 4 hours. This within 4 hours. Then daily. This daily. Weekly. This is weekly. Each of these candles you are seeing here opened in a week, every week. Then monthly, each of these candles opens within 1 month. So what do you see happen? It means that in a 1 month candle, you are going to find 4 weekly candles in a 1 month candle. 4 weekly candles are in this 1 month candles. In a weekly candle, you are going to see 7 daily candles in there. So while in a daily, you are going to see how many 4 hours? 6 4 hours candles. 6. Okay. So like this is the 4 hour candle. Now this candle opened 2 o'clock. It's going to close by 6 o'clock. This candle opened at 6 o'clock. It's going to close by 10 o'clock. This candle here opened at 6 o'clock, at 2 o'clock, it closed by 6 o'clock. Now, this candle here opened at 10 a.m. Nigerian time and it closed at 2 o'clock Nigerian time. So in every daily, you're going to see 6. In 4 hours, you're going to find 4. You're going to find 4 1-hour candle in every 4, in every, in what do you call it, 4-hour chart. So each of these candle formed within 4 hours. Okay, they form within 4 hours, but it means there are 4 1-hour candles there. In a 1-hour candle, you're going to see 2 30-minute candle in there. 2 30-minute candle in a 1-hour candle. 2 30-minute candle, you're going to find it in a 1-hour candle. Then in 13 minutes candle, so that's the way it goes on and on and on. So you're going to find a measure of the lower time frames in the higher time frame. So we have the lower time frame and the higher time frame. Most of the time, we consider anything from 1 hour to 1 minute to be lower time frames, while 4 hours to monthly to be the higher time frames. Okay. Okay. I believe you're following me and I believe you're understanding this. Okay. I should explain the inside candle again. I'll go over it again because, by the way, we are coming to the end of the class. We are going to continue from here in our next class. And I want to know, do you subscribe to us having a midweek class? I want us to quickly finish the theory class so that we can go into the technical analysis part very quickly. I'm going to go over inside candle in a bit, but I just wanted to find out from us which one you would like. Do we add Wednesday classes so that we can finish the theory part on time? Let me know a yes or no. So it's going to be Wednesday late night class. That would be like 9 p.m. 9 p.m. on Wednesdays. Okay, so if it's a yes, type in a yes in the chat box if you are fine with that. Okay, let's go back to the inside candle explanation. So yes, the inside candle. Okay, let me give you a good example of the inside candle here. Let me give you a good example of the inside candle. Okay, so look at this big bodied bullish candle followed by this small sell candle. Okay, so this is an inside candle, and what did I tell you? When you see, so this is a bearish inside candle at a high level of the market, and what happened there is that market begins to fall after that inside candle was formed. So you can see market dropping. Market began to drop from this point downward. So it's a good indication of market selling or buying. Let's look at a pin bar. Look at an example of a pin bar I just told you. This is a bullish pin bar. Can you see it? Bullish pin bar. Big tail, long tail, small, what do you call it? Head or body, and then a small wick. It opened at the bottom and it closed, and that's an indication for a buy. So, for example, anybody that saw this trade and started buying it at the close of this pin bar would have made some profit. You can see it would have made some really good money. Some really good money, at least up to this level. That's some good profit. Can you imagine? So let's look at other examples of inside candles. This is another one I'm seeing here. See, big body followed by a smaller bearish candle. Big body followed by a small bullish candle. Okay, and then you can see engulfing, some examples of engulfing. I saw one here. Look at this one. Good engulfing. Examples of engulfings on 30 minutes. So if we keep looking, we see example engulfing. These are the engulfing. These are the engulfing. This is another engulfing here. Okay. And this is a bearish engulfing. This is a bearish inside candle. Bearish inside candle. This is a bullish engulfing. I just want to show you. This is a bullish engulfing here. And this is another one. This is bullish engulfing here. So I'm just showing you an example of engulfing inside candle. This is an, something, yeah, this is another inside candle, bearish inside candle. When I say bearish, it means these are, the meaning of bearish now. They fall. They indicate a drop in price. This is a bullish engulfing here. Bullish engulfing. So when you see all this engulfing and all of that, where they happen is very important. Oh, this is a bullish inside candle. Look at it. Bullish inside candle. Mother bearish candle followed by a baby buy candle. And it indicates the market is about to go up. But what's most important, like I told you, is where it is happening. It must be happening at a structural level of the market. Okay, so let me keep it at that, ladies and gentlemen. Do you understand it now, Mr. Simon? Inside candle or inside bar, do you understand it better now? Let me know. Just type in a yes or a no in the chat box. Is it clearer now? Inside candle. Okay, great. Okay, so that's going to be all for today. And in our next class on Wednesday, 9 p.m., we are going to go on to look at other parts of this module. We are going to go into risk management and trade management. Today we have looked at candlesticks. What are candlesticks? How are they formed? And we have also looked at the trading chart, the different types of trading charts that we have. And then in our next session, we're going to be looking at risk management and trade management. I want to say thank you for joining the class today. I'll be seeing you in the next class on Wednesday, 9 p.m. Have a beautiful night rest. God bless you. God bless you. Okay, guys.